What is up, YouTube? It's Matt Faircloth. Welcome to the Mentorship Monday show. My name is Matt. My company is called the DeRosa Group, and we are a real estate investment company dedicated to transforming lives through real estate. For a quick shout out, thank you, Dave Perret. Awesome podcast, guys. Check out the Military Millionaire podcast, not just for military folks or for former military, just a great show. I went on their show recently and spoke at a networking group that they had that was on virtual. We had a great conversation. So thank you, Dave. If you guys are watching this right now, leave a comment. Here's the thing. Our guest no-showed today, and that's okay. We forgive them, but we want to talk. So if you guys are watching right now, you guys want to pop on live right now, leave a comment. We'll just get you. We just need your email address, and Justin will pop you a link. You guys can join us live on the show. Mario, hey, man, you're supposed to be on the freaking show right now, Mario. Like, what are you doing? Mario, get on the show, brother. You have a link right now. Look at you leaving comments on the show that you're supposed to be on. You got to check your email, Mario. You have a StreamYard link right now in your inbox. You're supposed to be a guest on this show, and you didn't show up. Love you, but you're supposed to be here right now, not just commenting on the show. You're supposed to be a guest on the show. Man, that made my day. That's funny. Cool. All right. I'm going to let you find that StreamYard link, and you can join us, or I'm going to have somebody else on the show here with us here, Mario. But, man, thanks for the laugh. Okay, keep going. So I needed that. Okay. Anyway, my name is Matt. This is the DeRosa Group. We're a real estate company dedicated to transforming lives through real estate. Yeah, wow is right. So that's that. Here to bring on, I need some help. Bring on my co-host, Justin Fraser. Justin, I've seen it all, right? No. That's why they call it Mentorship Monday, Mario. It's not Mentorship Thursday. It's Mentorship Monday. Anyway, real quick, if you guys want to be on the show and join me and Justin and have lots of laughs and have some great times, you guys want to just email us at helpme@DeRosaGroup.com. That is helpme@DeRosaGroup.com. And you should be here on Monday at 4:30 p.m. Eastern, bright and early, with bells on for here to be on our show. Not like Mario, who thought the show was on Thursday. That's okay, Mario. We forgive you, but get your butt on the show, man. Come on, man. You can still click on that link. It's in your inbox. Just do it. Come join us. Somebody else is going to beat you. If anybody else comments right now, they're going to get a link with their email to come join us here on the show either way. So that's the story, Justin. I think I've officially seen it all, brother. How about you?
Man, hey, happy Monday, right?
Happy Monday.
It's
happy Monday. Come on, Mario.
We'll get him on here. Mario. We're resending you the link as we speak in case you don't have it for whatever reason.
I'll cover it for you. So everybody, this show is brought to you by DeRosa Insiders, which is our program that Justin and I have that is there to give you all the inside view of a real estate company, to come see the inner workings, the ins, the outs, the ups, the downs, the struggles, the wins, the successes. And even we're starting to do some face-to-face stuff. We had a site tour that was available for insiders to tour one of our apartment buildings down in Winston-Salem, North Carolina. We're going to be doing more of that, more insider-only masterminds, a lot of insider-only access. Here is Mario. Here he is, buddy. Thanks for letting us tease you a little bit.
Hey, there you are.
Woohoo!
How you doing?
Insider-only masterminds.
All right, now you're going to turn me off. Yeah.
Here's Mario.
Turn your audio.
All right.
Your audio.
Mute your audio if you can. You're watching and you're participating.
Can you hear me?
I can hear you. I can hear me too, though. So.
All right.
Well, there we go.
Okay. Mario. Hey, so this show is sponsored by DeRosa Insiders. As Matt was saying, Mario, we are very happy to have you here. And Mario, you, for participating today, will get a free month of DeRosa Insiders. I hope that it'll be valuable to you. I know it will be. And hopefully we can answer some more of your questions. Today, you've got a question for us all about valuing property. So I'm going to jump down and we're going to pull that up and jump right into it.
Awesome. Mario, how are you today?
Good, fine, thanks.
Good. Okay, fire away. Here's your question that you had written into us, but put it in your own words. How can I help you? And Justin too. How can we pick your brain?
Well, I'm looking at a property.
Okay.
And I got the this year's income and expense sheet.
Okay.
but I also have last year's. Should I
Okay.
use this year's or last year's?
I wouldn't. Well, okay.
I mean, I have up to September.
Well, which one makes it look better for you, Mario? Before you answer that, is this a single family home, multifamily?
No, multifamily.
How many units?
Multifamily. It's
How many?
44.
44. Okay. All right. So does the NOI on if you look at like a lot of folks use like a trailing 3, okay? Like 3 months back. So if you're September, you could look at September, August, and July. If you want a real idea of performance, and probably what it's going to do for you is to look at July, August, September on financial performance, make a judgment on value, and then say, okay, let's just say NOI on a 44 unit, you're probably looking at an NOI of somewhere around like 19,000 a month, right?
Yeah.
Am I right? Okay. Hey, I'm pretty good guess, huh? So take it there and then extrapolate that back. Do you know how to do you have the data in Excel?
Yeah.
Okay. Draw a chart of it. Okay. I take like graphically display it. If you can highlight it all, Excel should be able to do like the months on the x-axis and NOI on the y-axis, and just draw like a line chart. You want to look to see what NOI is where NOI is trending, right? So are we trending this way? Are we trending this way? Are we just flatlining? Have you done this already, or
not yet? No, I haven't.
Okay.
I have it in Excel, but I haven't done that.
Okay. And then bottom line, I mean, this is all negotiation. You're trying to determine your offer price, correct?
Yes.
Okay. You gotta. I hate to be like this, or say about working the numbers one way or another, but you got to make the data work for you. And if you want to get the best deal, then you got to look at the numbers a couple different ways. Here are some ways that you could present the numbers to the seller to say, hey, listen, this is how I evaluate. If they had a low couple of months, if they had a COVID couple of months, look at how COVID affected the property. Forgetting about value for a second, say, okay, you used to be at 20,000 a month in NOI. Now you're at 17. And so I'm seeing a $3,000 a month drop on NOI, and I'm attributing that to COVID. You didn't see that. That's good to know. Okay. You want to kind of find out which scenario works best for you. I've seen folks value properties on trailing 12. So if you go back 12 months, that's going to bake COVID into it. Okay. Does that come up with an average NOI of less than 18,000 a month?
No.
Okay. Above 18?
Yeah, 19 and change.
All right. Does a trailing 3 give you what's the trailing 3 give you? Like just the last 3 months?
Yeah, just about around 19 each.
So it sounds like they're pretty stable at 19.
Yeah, and a lot of the units are Section 8.
Yeah.
They're small units.
Okay. I wouldn't put a very low cap rate on that if I were you, given Section 8, because here's why. You can't really push Section 8 rent. You can't go and say, okay, I'm going to do some value add and increase these rents by $150. Justin, come on in. And increase these rents by $150. Justin and I do a lot of big value add stuff where we're buying property. We just bought it. The deal we just did in North Carolina, we bought it, and he's got stuff that was producing $549 a door, and he did some light reno to it, and he's getting us $650 a door, and even $700 a door, $750 a door on the same units. You probably on Section 8 can't do that because, right? Am I right? Or
I'm not sure because. And this is a question for you. Can I from what I understand, you can have Section 8 pay part of the rent and the tenant pay the other part.
It has to go through the whole process, and your unit cannot be leased for more than market rate. So you can't say, like, let's say Section 8 approves them for $600, and really they could pay $400. Like, you can't set it at $1,000 if that's not market rate, right?
No, but I mean,
follow that.
And I know the HUD has established rates that they pay.
Yeah.
So, I mean, from what I understand, HUD pays, say, if it's 600, the HUD pays 300 and the tenant pays 300.
It does. So the way that it works is HUD's going to look at the market that you're in and say, okay, we've done a lot of work in Trenton, and right. So HUD will look at Trenton and say, okay, a 1-bedroom in Trenton, the average market rate for an affordable unit in Trenton is, I'll make up a number, $800 a month for a 1-bedroom, right?
Mm-hmm.
So HUD will say, okay, we're going to pay $800 a month for a 1-bedroom. That does not mean that tenant can go out and rent a $1,500 unit, knowing they can get $1,500 from HUD, $800 from HUD, and they owe you another $7. Here's the problem with that, right? That tenant will no longer qualify for Section 8 if they have the means to pay you an extra $700, right? So what HUD will do is they'll look at it the other way. They're going to say, okay, market rent's $800, but we happen to know that Jane Smith, your applicant, has a job. Maybe she's working and not making a ton of money per hour, or maybe she's got a couple of kids, and so they're upping her cost basis, and they're going to say she has a job, so we're going to give her some supplemental towards that $800 rent, and the max you can charge her is $800, and we're going to give you $500, and Jane Smith's on the hook for $300. But the most you can charge is the market rent. You can't go above that. And so nothing's wrong with that. It's just that your ability to push rents heavy on a Section 8 heavy property is going to be on the low side. All I'm saying is that it's not a bad deal. I'm saying make sure that your cap rate bakes that in, and make sure that you're making the cash flow you want to make when you buy it. You know, because it's going to be hard for you to squeeze much more cash flow out of the property.
Right.
Mario, just going back to an earlier point, as far as what time period you're looking at for evaluating the numbers, it's great. It sounds like you have all of 2019's P&L number, which is great, and then you have 2020 through September. You said correct?
Yeah.
So the more data you can look at, the better. You know, if you can chart the income and expenses against what their occupancy was.
It's pretty much been full all the time.
It's been full all the time. So then the variable then is expenses. How do the expenses change as you go through the year? Do the water bills spike in July because everybody's washing their cars or whatever, right? There's 1,000 things that could change. Heating, electric, depends on utilities, so you want to look seasonally. So if you're just looking at the, July, August, September, your numbers might be skewed because that's heavy summer months, right? So you don't know what happens in January at this property. So the more complete picture you can look at, that's why we look at a T12. Generally, you want that 12 months of data. You have more, so you can go back all the way, and see what were rents in January of 19. Now, data from January 19 shouldn't really impact you too much when you're looking at your November of 2020. It's pretty far away here, but it is good to know. But really, your pricing decision is going to have to be based on the T12, the last 12 months. Okay,
great. Now, another question I have: how do and I know this is probably going to have financing involved.
Financing what?
Financing involved. That I don't have to get financing. It's not going to be a cash purchase.
Yeah. Okay.
So I'm probably thinking that I'm going to need to look for investors. Now, and I know there's 20 ways to skin a cat, but how can I make it attractive for investors?
Okay. Okay. What's your buy? What do you think your buy price is going to be?
I'm thinking somewhere around 1.3.
Okay. So if you're getting 19 times 12 divided by 1.3, you said?
Yeah.
It's a 17% cap rate.
Yeah. That's a really low
awesome
price per unit.
That's awesome. I mean, you for real? If you think you can get it for 1.3?
Well,
I want to come hang out in your neighborhood, man. Wow. Jeez. If that's what you can get it for.
Whoa. Hold on.
Is that optimistic, or what are they asking?
I'm being optimistic because they said they were asking 1.6. But
even that's not crazy.
But they said that they refused an offer for 1.2.
44 units, you said?
Yeah.
What's the average rents?
Anywhere from 375, let's say, to 500.
Oh, okay. There we go.
Yeah, they're all small units. They're all 1 bedrooms.
Yeah. Okay. But there's still rents are on the low side. All right.
Yeah.
But so we can make that work. Okay. Have you run a financial performer yet?
That's no, but I was thinking that only maybe 5 or 10 units are around 525.
Okay.
So I'm thinking that maybe I could bump up the rent to around 5-ish.
Yeah.
For the rest of the units.
Yeah. You should.
That's what I'm thinking. My upside.
Yeah. If a lot of them are Section 8. Yeah. Here's what I would do. I would go out and pick up the software we use for underwriting deals is Michael Blanc's Syndicated Deal Analyzer, SDA, right?
Yeah.
Go pick that up. And then you're going to, okay, good. It's, as you know, it's Excel, right? So you can work it, you can add, cells to it, you can add math to it. The thing about the SDA is, well, the SDA is going to let you do value. It's going to let you do some value add. It's going to let you increase rents over time. So yeah, I would say, okay, I've got to invest X, maybe do some capital improvements on the exterior, bring the exterior up to snuff and stuff like that. And then you're going to do a rent bump. That's going to show you your projected cash on cash and IRR. There's a returns tab in there. Use that and use the P&L tab, and then develop a reasonably simple to understand slide deck for investors. We use PowerPoint for ours, just put your graphics in there, cut and paste the stuff over, and send your investors a very easy to understand presentation deck, for your offering. And again, it's fairly straight up. It'll just show the numbers. And the SDA will also let you determine the equity splits you're going to give and everything. So that's how you're going to get investors in. And I mean, if you can get what we target is getting investors in the beginning, maybe something around the preferred return of say between 6-7%, somewhere around there. And then getting a cash on cash into the low teens, like 11-12% on cash. And then an internal rate of return when you sell the property, just north of 15. Those are our standards. And we find that investors don't balk at that too much. That those are in line with the industry and what we're providing. So,
okay.
Yeah, I would go for that. Given this property, I think you should be able to cash flow fairly well out of the gate, right when you get in. So I think you should be okay there. I don't think you're gonna have a problem. And at even if you land at 1.5, your equity raise is probably going to be in the $500,000 to $600,000 range.
Mm-hmm.
How hard was that? How can you put that together? How hard do you think that would be?
Yeah, I'm thinking I can. Yeah.
Okay. With an interesting enough deal, could be. Now, I would definitely talk to a lawyer, an SEC attorney. There's a lot out there. You can look on Bigger Pockets or whatever. We've used Trowbridge Sidoti, and we've used Gene Trowbridge from that firm.
I've heard of them.
Yeah. Yep. We've used Duke and Kelly. Those are two of the big ones that are out there. What's Mauricio's last name, Justin?
Raul.
Yeah, I've heard of him.
Those are the big three that are in the space. Any of them, Gene Trowbridge, Duke and Kelly, or Mauricio, would be good places to start. This could cost you like 10 grand to do the legal. Yeah. But you can put that in your
sort of a small deal capital wise if you're going to syndicate it. You might want to look into, I don't know what the breakdown of that 500 or so that you're going to bring in. If it's one or two guys, I might look into it, just a joint venture partnership.
Yeah, I'm assuming you're going to go raise a lot. I'm assuming you're going to do a lot of small investors. But if you're going to do like 2 investors, you can just do JV.
Yeah, that's what I was thinking.
Which one?
JV?
We get the partners, yeah.
JV? Okay.
Yeah.
The way you want to do that is each of your investors has to have some kind of a role in the company. Even if you're the main deciding factor and you have controlling interest, you want to have them have some kind of a role. That could be like, hey, you sit on a board with me, audit the books, be there for an advisory when I need you, whatever it is. Likely co-sign the mortgage if you've got folks with bigger checks. So those are some ways you can get them involved. If they're signing off on the mortgage, then automatically they're going to be they're active in that. So if you just get the three of them, all three of you guys sign off on the mortgage on the property, that should be enough.
And those would be equity partners.
Mm-hmm. Yes, those would be equity partners.
Yeah. I was even thinking maybe of debt partners.
Yeah, you can do that. I mean,
well, You could, as long as your lender's okay with that, right?
No, I would just borrow the whole thing.
If you're going to borrow the whole thing.
You put together like 1.5 million in equity in loans from people, Mario?
I'm sorry?
If you had to, could you get enough people to loan you like 1.5 million?
I could try.
Right. Well, that's how because what I would do is just buy the whole place, just take the whole place down with private debt.
Right.
And then you can refinance out of that. The problem
Right.
to this point is if you put a first position mortgage on the property and then show up with private debt behind it, the banks are going to have a problem with you putting collateral on the property to protect those lenders. They're not going to let you give them a lien.
Right. So then you've got to be creative with your lenders and put something else up as collateral, possibly.
Okay.
Right. But then you're running into, what do you and do you not disclose to your first position lender?
Yeah.
And, you just got to be careful with all of that.
You can form an LLC with them and still have them as equity. It's just they don't have any upside, meaning like they're just entitled to get 8, 9, 10% on, maybe you got to get a little more interest, 8, 9, 10% on their money on a monthly basis. And then there is no upside. So when you sell the property for more or whatever, or you refinance the property, all that's your equity.
Right.
But a lawyer can help you structure all that. You can have no upside for them. Our buddy Adrian had asked about banks for this kind of thing. For this size deal, I would go for a small community bank. So wherever the property is, I would go and find a small bank that's got like no more than 10 branches around in the area of the property.
Or maybe a credit union?
Credit union will do it. They may do it. Some credit unions are funny. They don't want to do business loans at all. Some credit unions have gotten beyond, credit unions are great at auto loans, home equity lines of credit, that kind of thing. Some credit unions have gotten beyond that and are doing business loans now too. So I would start with the credit union because their rates are going to be phenomenal. They're going to give you terms that a small community bank won't be able to give. If they can't do it, then go to ABC Bank that has small branches, not like the big five, the big fives that are across the country. If their name's on the side of a stadium, they're probably too big.
That's a good point. Fair point.
Yeah.
But Adrian, you're asking about less than 25% down? Probably not. Yeah.
It's 30 to 25 to 30% down is the way of the world now. The days of 80% of 80% loan to value financing, I think, are gone for a while.
Really?
So yeah, I don't think you're gonna get it. I mean, maybe credit union might give it to you. A credit union, if they are right there in the town, right near the property, they may give it to you. I would shop it. I'd tell them that's what you want. Ask them for it. I mean, what do they say?
Yeah, it doesn't hurt to ask.
Yeah. Mario, we've given you a lot of options here, and I think the key is to run the numbers on a bunch of different ways. So if you go all debt, like what would your investors be willing to take as a return for that debt? And what does that do to cash flow on the property and your offer price? If you're going to bring them in as partners, what does that do? What kind of return do they need? What kind of debt can you get with those investors? And now you have to raise less, but you get more debt. So run all the different scenarios, make 4 or 5 versions of that syndicated deal analyzer and try them all out. And then you'll start to see some patterns in what you're putting in, what you're getting out, and that'll help you figure out which path to move forward with.
Okay, great. Awesome.
All right.
Thanks a lot. Appreciate it.
Absolutely.
Yeah, no problem, Mario. Thanks for joining us on Mentorship Monday, guys.
Sorry I was late. I thought it was Tuesday.
You gave us a good laugh, Mario. That's the best part about it was you were like, oh, our guy's not here today. And the first comment's like, hey, I know that guy. you're the guy. You're supposed to be here. What are you doing over there? You're supposed to be over here. Oh, cool. I've seen it all now. Cool.
Mario, you're going to get a month of insiders, DeRosa Insiders. And so that is our private Facebook group. So you don't have to pay for a month. If you decide after the month that you want to stick around, it's only $24 a month. And what we do is we give an inside look to all the great things that we're doing as an investment company. If you're trying to get a multifamily property, then DeRosa Insiders is the place to be. So whether we're finding deals, underwriting deals, walking properties, usually when we're standing on the top of a rooftop, we're doing live videos for our insiders. and just showing off all the different pieces that go into running our company and our projects. So I think you're going to get a lot of great support with people posting deals, with people asking for help. And we're moving towards getting people to probably find some partners through there. So I think the community is growing, and I think really good things are happening there. So check your email, and you'll get some instructions on how to join DeRosa Insiders. For those of you watching that want to join DeRosa Insiders, it's very easy. Just text DeRosa to 66866 right there. There you go. And you'll get a nice automatic reply with some goodies from us and some instructions on how you can join DeRosa Insiders. We would absolutely love to see you there.
Awesome.
All right. Well, thank you very much, guys. Appreciate it.
Insiders, Mario, thanks for joining us.
Thank you.
Cool. Adrian, Sean, thanks for your comments, man. Mario, thanks for your comments before joining us today. Justin, that was a great show. I think that it's really about what I got today is about looking at multiple options on a real estate offer, on a real estate deal, and just trying to find the best way to make it work. I think that Mario's got a lot of options in front of him on how to make that deal happen. And if he just kind of keeps his mind open and tries plan A, plan B, plan C, he'll find a way to make it happen. What do you think?
Yeah, I mean, look, everyone's looking for that deal, right? And so if you get a deal, then let's use all the tools in our tool belt and see what the best path forward is.
I heard Brandon Turner say this. It's not about finding good deals. It's about making good deals. So it's not about like, oh, hey, this is a great opportunity. It's about like, okay, what can I do? What business plan can I do to make this property, to make this deal work? So
yeah, and one of his options might kick out no returns, and one of his other options might kick out huge returns. So
same property.
You just have to run the numbers. Exactly. It's all about how you do it. So.
All right, guys, help me at DeRosaGroup.com is the email address for Mentorship Monday. Make sure you send a line over to that. Help me at DeRosaGroup.com. Come join us here on the show and get a month of Insiders for free. Be sure to check out Market Hunter Thursday with Hervé show coming out on Thursday. We've got new episodes every Thursday, and you guys get to watch those live on Thursday on the YouTube channel. On Insiders gets to watch those live a week before they come out, so you guys can get the inside scoop and get a jump on communicating with those brokers that Hervé has on the show. Cool. Check it out. All right, Justin. Ready? Here we go. Have a great profitable week. That's a good one.
That was a good one.